This is the everything code. I've not shown this to everybody before. Here's the everything code against the NASDAQ. Because if we can forecast liquidity, we can get somewhere close to forecasting prices. So it's suggesting by June 2025, we get to somewhere like 27,000 in the NASDAQ. Those of you playing along at home in crypto, here is the same. The cycle gives you a peak of 400,000 in Bitcoin. Again, I have no idea. It could be 50% wrong. I don't really care. The point being is the structural rise in prices lies ahead, and it's going to be reasonably big.
Raoul, the founder and CEO of Real Vision, is confident he's uncovered the key to significantly growing wealth amidst the ongoing devaluation of fiat currencies. In a recent video on his YouTube channel, Pal, a renowned macroeconomics expert and former Goldman Sachs executive, outlines his everything code thesis. This theory aims to establish a symbiotic relationship between central bank balance sheets, particularly the Federal Reserve's, and asset prices. According to Pal, the global economy reached a critical juncture during the 2008 financial crisis, which should have led to a catastrophic collapse. However, central banks intervened, preventing a meltdown and initiating a permanent shift in the global economic landscape. This intervention created a liquidity cycle that progresses through expansion, peak, contraction, and trough stages, all driven by central bank balance sheets. Pal suggests that investors can leverage government economic policies to protect and grow their wealth amid ongoing currency devaluation. Pal's strategy is straightforward: monitor the balance sheets of the Federal Reserve and other central banks. These institutions consistently inject money into the economy, directly impacting the business cycle and asset prices. As central banks increase money supply, asset prices rise. In the video, Pal makes a bold prediction, foreseeing Bitcoin reaching $400,000 by 2025, coinciding with the peak of the current liquidity cycle before entering another contraction phase that could usher in the next crypto winter.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Get this now. When I first started saying, oh, by the way, the key driver of asset prices is liquidity and debasement, everyone laughed at me. And now everyone takes it dead seriously. This is the NASDAQ, which is 97.5% correlated to total liquidity. It is the key driver of all assets. Why 97.5 and not 100? Well, the 2.5% is the NASDAQ outperformance based around a secular trend of adoption. That means that it doesn't entirely map. So, I mean, that's a crazy, crazy thing. The other thing that I've tried to explain to people, it's really difficult to get people's heads around. Everyone goes, equities are expensive. I'm like, you're looking at the wrong measure. Because if you think about what debasement does, it moves the scarce supply asset price or equities, let's call them equities, but it doesn't affect the variable input, which is earnings or wages. So if you think at economy level, wages grow with GDP roughly, and assets go up with liquidity, debasement. So one goes much faster than the other, which is why the rich get richer and the poor get poorer. The exact same mechanism is what drives valuation of equities. Earnings are variable. They're more in line with GDP growth. The price of equities is driven by debasement. So over time, what we see is equities look optically more expensive using this old measure. This measure was fine when we weren't debasing the currency. It is next to useless now when we look at a world of currency debasement since 2008. Crypto is the other one that's driven by this liquidity cycle. In fact, everything is. But again, I'm focusing on two assets, and you'll get to understand why later. So here's Bitcoin, because it's got the longest price history of all crypto. Here you've got about an 85% correlation with liquidity. Why is it not high? People think, well, this is all just a liquidity thing. No, it's liquidity plus technological adoption. And that technological adoption is what drives the outperformance, which lowers the correlation. But it's, again, staggeringly high correlation. Liquidity is everything. It's something I've tried to get across. The everything code is the understanding that liquidity is everything. It's there for a reason. All the governments and central banks understand that reason, which is we can't have a debt crisis. If you debase currency, you can't also have a stock market crash where the main market is down 50, 60%, because all you need to do is debase the currency and by magic, the market goes up. You guys can all remember what happened in 2020. that was debasement of currency that stopped the asset side collapsing, which would have brought down the house of cards because assets are collateral for all of the debt. So you can't have, we've taken out that left-hand skew of the markets, which is the ability to crash, because all they need to do is turn on the magic money printer and it all goes away, even though it hasn't really gone away, as we know. You're all paying for it by this tax, which is a debasement tax of 8% a year plus the inflation. Again, money printing doesn't create inflation. Inflation is based on inflation as in CPI is a variable asset thing, which is goods and services that are supply and demand. That's not driven by this. This drives assets and scarce assets only. It does not drive wages. It does not drive earnings. It does not drive commodity prices. It does not combine all of these things where people's narrative is confused. They're looking at the wrong thing. They're confusing debasement with inflation.
Raoul Pal's thesis comprises two pivotal components. Firstly, he posits that the Federal Reserve and other central banks will persistently inject money into the economy, closely intertwining asset prices with their actions. Secondly, while certain assets may lag behind in relation to the Fed's balance sheet, others either keep pace or significantly surpass it. Assets such as those in the Nasdaq and cryptocurrencies fall into this latter category. According to Pal, these high-performing assets act as his beacon for wealth accumulation. Both crypto and tech stocks not only safeguard wealth by matching the Fed's balance sheet growth but also harbor the potential for rapid expansion. Furthermore, Pal underscores that both asset classes are priced for their cyclicality, aligning closely with the business cycle and central bank's four-year debt refinance cycle, which dictates global liquidity. This cyclical nature forms the backbone of Pal's analysis and resembles poetry in motion. He also delineates that each four-year cycle breaks down into smaller cycles: macro spring, summer, fall, and winter. Liquidity surges during spring initiate a modest recovery phase for asset prices, with summer witnessing intensified liquidity injections by central banks. However, fall marks the apex of liquidity influx worldwide before the onset of the extended winter months. Understanding how these dynamics fit into the current crypto cycle, anticipating asset price peaks, and discerning the fate of leading crypto assets like Bitcoin at liquidity peaks are crucial. For deeper insights, let's delve into more excerpts from Raoul Pal's illuminating video.
Let's forward look liquidity. Don't expect this to be perfect. This is the first time we've used this kind of thing. But here is, using the ISM cycle, we can forecast the global liquidity cycle. And it suggests that global liquidity peaks in September 2024. And it doesn't go negative until December 2025. Our work tends to suggest that the assets peak when the liquidity cycle goes negative or just around beforehand. But it could peak not with the peak liquidity, but somewhat on its way. But generally speaking, it tells us we've got most of 2025 to be positive, and then things go negative again. Now, you might see the underperformance now and say, well, why is it not working, Raoul? Look at liquidity. It's not following. It's like, this is early days yet. We've got plenty of liquidity to come, whether it's helping China by injecting dollars into the global system for the Chinese currency or for the Japanese, or bailing out the commercial real estate, or giving out stimulus for the election, or whether it's running down the Treasury General account, or whether it's the Chinese printing money or the Europeans cutting rates, or whatever it is. There's lots of liquidity that lies ahead. They've just been a bit slow with the massive injections of liquidity because they needed inflation to get down. Now, we think inflation is dead, at least for the rest of this cycle. So therefore, they should have a green light to really start jamming liquidity. So it's been delayed, let's say, because inflation is not below 3% yet. That's all to come. Okay. By using that, we can forecast how liquidity goes. And guess what? It fits within that lovely log trend, which is perfect. It kind of suggests that this would be right. So global liquidity peaks around then. That's what it's going to look like. And eventually, as liquidity itself starts falling, we will end up, so that's June 2025 now. And as liquidity starts falling by December, then assets should cool off significantly and we go through the winter cycle. Now, please take these. I know people are just going to take them and say, Raoul Pal predicts this. Do that, please. It irritates the shit out of me. This is the everything code. I've not shown this to everybody before. Here's the everything code against the Nasdaq. Because if we can forecast liquidity, we can get somewhere close to forecasting prices. So it's suggesting by June 2025, we get to somewhere like 27,000 in the Nasdaq. Does it peak then? Does it peak somewhere between then and December? But we're looking for that kind of directionality. It also maps with those log trends. We get to about 30,000 in NASDAQ. That's kind of like the target in my head. Will it be less than that? Will it be more than that? Don't know, don't care, directionally right, before you start having a larger correction. For those of you playing along at home in crypto, here is the same. The cycle gives you a peak of 400,000 in Bitcoin. Again, I have no idea. It could be 50% wrong. I don't really care. The point being is the structural rise in prices lies ahead, and it's going to be reasonably big. Now, again, what are the dates between 2025, June and December? Does crypto peak early? I don't know. I actually don't think so. It would, because we're going to more closely follow the 2013, 2017 cycle, but it's not clear. So I keep an open mind. It's not about nailing the top. It's not about getting the price right. It's about directionally getting this whole trend right. So now I've laid out the everything code and how, by putting all this together, we can actually forecast assets, which is pretty fucking bizarre. We'll see. It's still a hypothesis. It's been working perfectly since we discovered this. Let's see how it plays out over the cycle. But directionally, it's the most important thing you can use, understanding this stuff.
What do you think of Raoul Pal's in-depth examination of the everything code and the Federal Reserve's ongoing liquidity loop? We'd love to hear your thoughts and insights in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.